but let's talk about some earnings. The big one due today, this is from L&T Tech. So Rima is going to take us through what we can expect this time around. Rima, mid-cap IT.
Well, it's going to be important because Tata Elxsi is a similar ER&D play, and we know Tata Elxsi's earnings were softer than street expectations. Now, Tata Elxsi trades at very high valuation multiples. So when L&T Tech is trading at 30 times forward multiple, Tata Elxsi is almost at 60 times. So when you are trading at very high, valuation multiples, the margin of error is low, which is why when there is a miss, you see a sharp decline in the stock price. So in L&T Tech, but it also, suffers from the same thing. The valuations are very high compared to the rest of the pack. So watch for the numbers because the ER&D space, going by Tata Elxsi's numbers, has shown some slowdown. The top line growth is seen at 2.9% in dollar terms. In constant currency terms, it will be a growth of 4.5%. So fairly steady, and it will be driven by the ramp up of deals that the company won earlier. Margins will decline on a quarter-on-quarter basis because of the wage hikes that the company has given effective 1st of July. And that's the reason why the profit will largely be flat on a sequential basis. The key is going to be their FY23 guidance. Now, unlike in Infosys or in HCL Tech, which guides in constant currency terms, which basically means that irrespective of the fact that the euro depreciates, the pound depreciates against the dollar, this constant currency revenue growth guidance remains intact. But L&T Tech guides in US dollars, which means that when euro and the pound, the yen, and all the other currencies depreciate, its US revenues come under pressure. Its current guidance is 13.5 to 15.5%. Will this be lowered? Now, Kotak says it could retain the guidance, but the actual growth will be closer to the lower end, while CLSA says they could lower the USD FY23 revenue guidance. And what about margins? The current guidance is EBIT margins will be above 18%. Do they hold on to that? And finally, in terms of commentary, because they have exposure to high-tech, telecom, medical devices, and these are segments in the engineering and R&D space which can see a slowdown when things get tough. So these are the expectations from L&T Tech this time.